Good evening and welcome back to Be Rich. Today, I have my brother Anand Srinivasan with me, and we had a very interesting topic to discuss. Of course, this came from an article in The Economist and something which I've been observing in India for some time. What has happened is because we have had a very low interest rate regime and money has been freely available across the globe for the last 20 years, consumers have really leveraged themselves to the hilt and they have refinanced their home equity and taken that money and spent it too. More in developed countries like Canada, Sweden, Australia, which are countries which normally expect people to be very safe. And Australian prices have been going up for 26 years in a row. And so their wealth is their house, which they refinanced at very low rates. And when spoke to a couple of Australians when I was in Australia last week, they've been talking about how interest rates have suddenly gone up from 1 to 6 and 1 to 5 in
They
some
make it sound as
cases.
though it was totally unexpected.
They make it sound ineffective. 1 to 5 doesn't seem to be a big rise, but you have to understand 1 to 2 is 0 to 1 is 100%. So 1 to 2 is 100%, 2 to 4 is 200%, and 4 to 6 is 300%. So some people have had a 300% increase in interest rates and some 250, and it's not done. The Fed has not said it will stop and start to cut rates. He has said from 0.75 he will make it zero point 0.5 in the near future, and we are celebrating for that. A couple of zero point 0.5 will take it past 5.5. So the mortgage rates across the globe will be 6.5 to 7. Inflation is evenly spread across countries and is now entrenched in labor expectations. So you need to have sustained high interest rates for a long period of time. What this has meant is real estate prices have cracked. So people's home equity has shrunk. Some of the people who have borrowed beyond their home equity because the fall has meant that it's wiped out the home equity and their borrowings. So they either have to pay up the difference or their properties will go up for auction. At the same time, in the tech world, jobs are less. The jobs that are available are the low end service jobs, and it's America and the West is losing high paid jobs. This is the crisis he is talking about in The Economist, and he says this will affect consumption across the developed world. Is this the scenario they're talking about, or is there a variation?
No, this is exactly the scenario. One thing which he does say is most people, what they tend to do is they seem to compare ourselves to what's happening in the US will happen because they all think that. But one thing he says in the article which US has an advantage is the reserve currency for the world is dollar.
Yes.
And for most things, US is independent. They're independent on food, they're independent on energy, and they have the global currency, reserve currency, and it's a strong dollar. That means
Yes.
anything that comes into US,
It
things
gets
only get
cheaper.
cheaper. So
Cheaper.
inflation and only tame inflation.
Yes.
So he says, first of all, don't look at US. That's
Yes.
a
Yes.
comparison. And he says important, that's why he says important like countries like Canada, Australia, and Sweden to compare because he says it gives a nice spread. Because Canada is looked at one extreme, Sweden is looked like it's not really a
Paragon
democrat.
of future.
Yeah, it's not a democracy because there's a huge government support system there. Then Australia is also like Anand says once quasi communist.
The quasi communist
Yeah.
state.
So when you take these which are all like in developing countries like India, we look at these places and aspire to go to these countries, and we look at these as the pearls in the
Yes.
world. And when he says if you see the earthquake which is happening there in India, it's going to be tenfold because in India, thanks to whatever reasons, we have been giving a lot of free money through various methods. People in the middle class and lower income middle class have been tempted and baited by all this free cash which is coming. Free leverages is being offered with no security, easy money, money on the phone, money on the tap, with no security will give you with high interest rate, this, that. So everybody has taken a lot of borrowings and they think everything is going to go hunky dory. And when the market cracks, that means market crack when Anand doesn't mean stock market cracking. It means losing of jobs, stock share prices going down. It means property prices crashing. So these are the things when Anand says it's going to crack. It's not just not the share price which is going to crack. your real estate is going to crack, your employment is going to crack,
That's
joblessness
really,
is going to
really
rise.
correct. In these countries, people have leveraged their soul. What is leverage? Basically, you're discounting your future labor for current consumption. So these people have consumed the next 2 3 years labor, and if that 2 3 year labor vanishes, they are in serious trouble. And it is, believe me, it's serious trouble.
And another thing which people in India don't realize is all these money they borrowed can be called upon any moment. You're assuming by law they can only give it to you, you have to only pay the EMI. He may suddenly cut the account short and say, okay, boss.
In credit cards, especially, if you have maintained a good account, he can just close the account and say, from tomorrow you cannot draw, and he they can
Without any warning.
without any warning, and they can, all your CC limits can be cut. What can, only your fixed and your loan, they cannot refinance. Normally, what happens is when you pay 3 years in a personal loan, they roll it over and give you some money, and people keep on rolling that money. That they can stop. But things are getting back to worse because people have been consuming on debt, and the earnings has not grown at the same pace. So consumption is growing at a rate faster than what earnings has grown, or earnings of people have grown. In India, like one official of the government pointed out yesterday, what has happened, one of the saner versions, is because since the consumption rates are much higher, people don't have money to save in financial assets. So so,
Percentage,
uh,
financial savings as a percentage.
financial savings as a percentage of GDP has started coming down. And then savings are required to funnel investments. So when there are no savings, government doesn't save anyway. It just keeps spending in terms of risk. And so when there are no savings, investments has to come down. Savings minus investments is equal to exports minus imports, which means foreign capital is required for investment. So far, foreign capital was flowing in very easily, so we were investing. Unfortunately, with the interest rates going up, foreign capital is becoming scarce. So you have no money for investments. So India is going to get caught in a system of low investments and higher painful deleveraging of the middle class.
And the problem for the middle classes, like what Anand told us in many videos, none of us have seen this kind of interest rates in our lifetime. So we are so used to this consumption level being so high that we do not know how not to consume. It is psychologically very hard for a middle class person and guy who's just come out of engineering college or wherever in a software job, IT job, suddenly to bring down his consumption because psychological impact of such a thing is tremendous on him. His social life has to come down. His spendings have to come down.
Let me just give you an example. When I went to college, I got a TVS 50. Okay, and that was out of the world in 1980s because it was 30 kilometers I drove up and down from my uncle's place to college. So I got a TVS 50. That was considered a big gift. Okay, and I was in third year when I got my first motorcycle, and I was a rich man's son. Okay, most of my classmates didn't have a bike. Now, most kids have a bike today in class 11, class 12. They have a car. These cars are bought on EMIs. Parents buy children cars and bikes on EMIs. They buy from phones on EMIs. This is huge, and this deleveraging is going to be extremely painful. And this is why I'm worried when big companies are cutting high paid jobs. Like Zomato pays their engineers, the software guys, a good amount of money. Ola, Uber, and all these guys are now throwing out people left and right. Twitter has sacked a lot of people in India across the globe. The jobs that are being lost are high paid jobs which are going to fall into this crisis. Like Vinod says, US doesn't have to worry much money. The dollar gets cheaper. The stronger the goods they are importing gets cheaper. They don't need oil from the rest of the world. They don't need food from the rest of the world. What they need is only consumer durables. And it is going to be cheaper for them. So America is in a sweet spot as a country. Its
We
middle
should
class
not
will
compare
suffer.
ourselves to US.
Don't compare yourself with US. The euro is weakening. The krona is weakening. The krona weakening is hurting Sweden.
Australian dollar.
The Australian dollar cannot hold off against the US,
No.
and most except food, and that's it. Everything else is imported into Australia. They are going to
And
pay a price.
and like Anand said, these jobs which are being lost are high paying jobs. The age of those guys who are losing the jobs are between 40 to 50. These guys are married, they have children, they're at school. These are not the guys who are like young guys who are not married, who are just done 5 years of software coding. Those guys who lose their job can easily pick up something, do something, re engineer themselves. This majority of these jobs are going at guys at 40 to 50 age bracket. And none of them know what's happening. And none of them have ever seen this kind of a scenario. So it's going to be some real tough.
Yeah, I was 11 years old when this happened before. We had no idea
True.
because I was living in a enclosed socialist world in India.
Yes.
We didn't know what
India
was
is very
happening.
different.
We didn't know what was happening in the rest of the world. So Indians have absolutely no clue of what they are going through. This is really because people around me don't go by what the media says. I can list out 6 or 7 people whom I know personally who are under pressure on the exact this home equity loan, what is called as loan against property. It's very painful. It's extremely humiliating for them.
Yes.
The banks are putting pressure. The COVID period is over. They have absolutely no business. They don't have earnings to pay off this. This is really hurting them. So this is happening not only in India, in Sweden, in Canada, in Australia, because these are diverse countries. In America, there is pain, but the pain is mitigated by a strong dollar. And the fact that they don't have to they set the price for the crude and they set the price for food. Anyway, I hope you understand this and people living there can empathize with what I'm trying to tell you. Thank you for watching. Be Rich. If you like this video, kindly hit the subscribe button of my channel. Like the video, hit the subscribe button of my channel. Turn on the bell notification. If you don't turn on the bell notification, you will not be notified every time we put out a video. Once again, I thank you for your support for Be Rich. Welcome back to Be Rich. In the first week of December, between 8th and 12th of December, I plan to be in Muscat in the Sultanate of Oman. Those who would like to see me in Oman can get in touch with my team. There's a WhatsApp number given below and there's an email ID also given below. So those desirous of getting in touch with me at the Sultanate of Oman, especially in the city of Muscat from 8th to 12th of December, can definitely contact me there. I hope to see you all in Oman soon. Thank you for watching. Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.